Hello, everybody. What a nice full room. It's super exciting to see you all here at Osborne Clark. My name is Kellyanne Watson. I am the Managing Director at the Class Foundation. So we did a bit of a site tour this morning at Noble Students, part of CA Ventures, which was absolutely phenomenal. It really, really talks and sets the bar for what is happening in terms of PBSA within the UK, but also far and wide. We've got some really inspirational speakers today, so I'm really excited for you to hear the data insights, the sharing of best practice, but also what is our vision for the sector going forward. So I'm going to introduce up our wonderful founder, Frank Uffen, and also David North, who is going to speak on behalf of Osborne Clark. Thank you so much and enjoy the show.
Thank you very much, Kellyanne. Can you hear me in the back, please? Yeah? Okay, perfect. Good morning, everyone, or afternoon. Indeed, a great site visit this morning. I am always surprised how in PBSA that you can still evolve through design and new ways of community building that at the end of the day gets reflected in physical buildings. And this morning I saw a really new way of setting up shared kitchens, but also integrating some of the solutions that as an operator I know myself are considered one of the biggest pains. The washing machine, how to take care of the laundry when you're not in the neighborhood. So Novo has integrated them into their shared kitchens, and I thought that was really, really nice to see how that worked. So yeah, I also heard that there was already still a lot of demand for that. So in 3 months, I'm sure you will open the building with full occupancy. And thanks again for hosting us. Yeah, David, I mean, you also have a refurbished house. Thank you so much for having us.
It's especially refurbished for you.
Yeah, exactly. Yeah, it had a little bit of that like deadline of 1st of September when schools open and you have to get your building ready. But no, it looks all wonderful, and thanks so much for your hospitality. You've also been a strong partner for us, so we're really happy that we can meet here today for the UK market session.
Yeah, yeah, and thank you all for coming. As I say, I'm David North. I'm a real estate partner at OC here, and you're all very, very welcome. For those that you don't know, and I promise these will be the only stats I'm going to reel off, OC operates out of 25 international locations across Europe, Asia, and the US with over 1,500 lawyers. And given that with most law firms, it's a given that there's legal expertise, what we really encourage with our lawyers is to get under the skin and understand the sector. And one of the sectors that we really, really love at OC is PBSA. So it's really nice to host you guys. We grew a bit like the class from humble beginnings, acting for Unite in the early 2000s, and I know there's some ex-Unite guys in the room. And we've shared our experiences with our international colleagues who have totally embraced all things concerning student living. So we can operate across all jurisdictions with our international colleagues, and some of them are here today, and you may get a chance to have a quick chat with them. I've always been a massive fan of the class, and I came to the class in the very early days when it was the class of 2020, and it was just the small regional conferences in Amsterdam. But it's amazing how this has just created a really great community. There's people here that have been coming to them for years, and it's really nice to catch up and see old friends. And I think at OC, we have a strategy on PBSA, and I promise we haven't copied your strategy, but at OC we see coming forward over the next 5 years for our clients issues concerning decarbonisation. Students want greener building, digitalisation. At some stage data will be as valuable as perhaps the bricks and mortar of the building, and urban dynamics, so onto the subjects of smart cities and how campuses will regenerate whole parts of our towns. And so it's going to be a really interesting agenda, some really interesting speakers this afternoon, so I'm really excited. So I'm going to shut up and let's get on with the proper stuff.
No, but thanks again for hosting us. And I do think it's, as you said, it is really, the idea of us building a community together as the sector grows and having all the different stakeholders involved. And often I think when we talk about planning or legal issues, we forget also how much you can bring to the table, and also in a proactive setting, how you can advise on how not only at the end more student housing available, but also the way it's set up. And we're going to talk about planning and other things as well. So please feel free to contribute as well. And yeah, as you said, how many of your colleagues are here? A few there? Oh, okay. Okay, great. Bar full. Thanks also to the other sponsors. Housing Anywhere is here, also part of the panel. Martijn will speak. Patricia is here as well, and your new colleague. A partner of the class also for a long time, but wasn't active as much in the UK, so very exciting that you are here now as well. They have been also extraordinary partners for us in terms of getting new data out about movements in the market that often have not even been, we've not been aware of. Housing Anywhere connects operators and students, and they were one of the first to signal that the supply in the housing market in the Netherlands was dropping very quickly, probably in reaction of new policies that were very unfavorable to student accommodation, small landlords providing student accommodation. So that was very interesting to have you guys here today. Lavanda, also one of the leaders in flexible booking systems. Thank you so much for also sponsoring here today. And GSK, also here is a team from Hamburg and Berlin, and also here with London office, and Yardi, also a great tech partner for us, and hopefully for you as well. Thanks for those. I always want to mention at least the 3 research projects that we're currently working on, which basically fuel our conversations this year. The Student Living Monitor is live. We're doing a survey of student well-being and student living experiences across Europe with many of you already. If you haven't been engaged with us about that yet, please let me know. Arunima is there also in the back. She can tell you more about it. We will publish these results in September by the new year, and we'll hopefully be able to create again a correlation between the student accommodation proposition and the impact it has on students, which we think also in the current ESG conversations can be extremely powerful. Demand survey, also an indicator for the industry, finger on the pulse, what's expected in which markets for September, something that universities find also extremely helpful. So please also, I know some of you have not responded to that survey yet, please do. And then later in the year we'll also reach out with with our investment barometer, basically asking you where you're planning to invest and with which volumes. So those things are from our side. Then of course we have the great PropTech conference, first one, a co-creation conference on the 1st of June in Amsterdam, where we are going to tackle some of the things, especially from the operational side, and work together with our tech partners instead of working in silos and having all different relationships, actually bring everyone in the room. It's going to be very exciting. Lisbon, 13th of July for the Iberian market. It's a great way to start your summer. And then to end your summer in Milan on the 6th of September. So that's the agenda for the class. I know you're already busy with a lot of things, but please join us wherever you can. But before that, I would like to invite Jolanda Barnes and Tim Waring with me here on stage. Please, yeah, thank you. Small applause, please, for this.
That is me. That is me, yeah.
Yeah.
It was a few years ago.
So we invited Jolanda and Tim because we know them as 2 critical participants in debates about what we think is the future of student accommodation. Tim in particular from the planning side, and Jolanda for me is always someone that has a very interesting understanding of investments and urban development and the idea of risk in that. And as you know, in a lot of the places where we work, we're dealing with sometimes very narrow conversations about student accommodation. In a lot of university cities, PBSA has become quite controversial. despite, of course, a increasing demand and also a forecast that requires us to create more housing. And what we notice is that in many cases the conversation has become a negative one, and also from an asset management perspective that although we're super happy, of course, that a lot of investments are now available for student accommodation, not only in the UK but also in the rest of Europe, that it's not always reaching its full potential yet. So we're really interested in encouraging a debate about how can we create urban campuses that really function as an ecosystem. The kind of mixed-use developments, the kind of, say, social impact that we know student accommodation can have. And that's something that we wanted to explore today with two people that have first-hand experience. And yeah, I also hope that it's something that can inspire our conversation and show us maybe what, together what we can do as a community. So Tim, yeah, you know that at the class we always look at the university level, we look at the urban campus, and we look at the property itself, 3 different levels. Today in particular on the at the urban campus side, your experience across the UK, what do you see are one of the main, how would you frame the main planning issues at the moment?
Well, first of all, planning and inspiration don't go together, so apologies. I mean, we work as a company across the UK, regional cities, London, through all land users, but PBSA particularly, I find, dealt with in a controlled manner in policy terms. It's not a creative, it's not dealt with creatively, it's not dealt with proactively. It's a reactive policy base, despite the fact that the government's whole agenda about housing, and it's about housing everybody, not from those who want to live in houses through to the elderly, through to affordable housing. Student accommodation seems to find itself as a kind of an afterthought in policy terms. And the consequence of that, I think, is that you end up with a tension between the promotion of development for PBSA and the delivery of it against the policy background. So that's one of the biggest challenges I think we face. And the consequence of that is that there's a slowdown in terms of the delivery. And I think also what it does, it stifles creativity, it stifles the mixed-use communities that perhaps we should be looking at student accommodation for. I know we can come to it at the end, and how do I see the potential future and how can it be improved? But there are a number of ways that I think the planning system could change to the benefit of delivering quality PBSA.
Do you find the understanding of PBSA is sufficient, or is there another reason why there's a reactive culture?
I think there's a general misunderstanding on lots of land users, because many planners who we are dealing with and the planning committees that we deal with are perhaps 2 or 3 generations on from students, and the market has moved on so significantly, and I don't think policy has caught up with what today's market is. So I think as a consequence it's seen almost as it's seen just as a single tenure, and there's a misunderstanding, there's a lack of understanding as to the broadness of the PBSA market.
Yeah. Okay, great. Yolanda, good to have you back. Yeah, you in the past have also contributed to our conferences with your insight and hosted us last time at UCL. Yeah. As a researcher, you always look, dare us to look long term. From your perspective, what do you see are some of the issues with the way the PBSA sector functions at the moment?
I suppose the main issue for me is the P bit of the essay. My biggest concern is what purpose have we been building student accommodation for? And I think the exposure to risk is around having designed the product for a very specific point in time and a specific market. And the obvious sort of issues and risks are that market changing and moving away. I think probably we may not be thinking enough about the demographic impacts, the fact that the number of young people in towns and cities, actually across Europe, is unlikely to increase in the same way that it has in the past. So there's that very basic sort of bed space sort of equation. And then there's actually the type of property, a more qualitative sort of aspect, which is potentially, especially I think around the upper end, the luxury end, whether that demand from overseas students is, I think even if it's sustained, and speaking as it were from somebody in the education sector now, I think it is likely to be, but I think the quality of that demand could change quite significantly. And in very sort of broad sort of terms, we might see a move away from quite so many Chinese students to, for example, I don't know, Indian subcontinent, South American, where the quality of demand is going to be different, and consequently I think we have to rethink the quality of the accommodation. So that's a very kind of sector specific and deals with the purpose-built sort of issues. I think though, to speak to the points that have already been made, the SA bit, the student accommodation bit, I think is the other issue. So there we are. I've challenged the whole notion of PBSA. Should we just be accommodating students, or should we actually see this sector in its broader context? And I think this is something I'm saying to any sort of sector gathering anywhere in real estate, is actually, is the notion of sectors, of asset classes, actually appropriate for the 21st century? And should we, in any sector, only be looking at one specific asset class? And what the challenge to you is really to start saying, well, is student accommodation just one of very many types of accommodation on a spectrum from sort of long-term owner occupation right through to Airbnb short-term lets, that's actually about accommodating visitors to the city or to a place? And if we start thinking in those terms, I think we can actually start to unpack some of the really significant issues that I hear about actually globally, but especially in Europe, this conflict or potential conflict that's been talked about in the context of Cornwall at the moment between the visitor economy and the indigenous sort of residential economy. And I think it's going to be played out at the local authority level, which is why we've got such a chaotic and crazy sort of response by planners in different places, because I don't think we're looking at the issue really sensibly. And so my solution, or the start of a solution, I would suggest, is to recognise you're in real estate, and real estate's about land, and how we manage and control and purpose and build on land. And I think if we start thinking of the PBSA as one of the many landowners, then we can start thinking less about risks and issues and more about the sort of solutions that we might be able to put in place to what is actually a much broader societal issue.
I think in response to that, I think the difficulty we have in the UK with the planning system is that it isn't as liberal as it could be in terms of the wider asset classes you're talking about. And I find myself in discussions with the councils about ensuring flexibility in the buildings that we're promoting for future repurposing. But the planning system doesn't enable that repurposing easily without a change of use. So for example, we achieve a planning consent for a student accommodation, sui generis use. to convert that to residential. If you've got a box, you can divide it internally and change it, but then you've got to then change its use. And I think the planning system will probably need to change a little in that respect. This government that we have at the moment is about liberalising the planning system, so they say, but as we all know, it's going in the other direction. We've only just heard about the new consultation on Airbnb, for example, which is about actually constraining, again, the system a little bit harder so that you can't go through that flexible route. So I think the way the planning system is built at the moment, I think that is causing a constraint on the...
Yeah, I would agree there. And I think particularly this sort of failure to realise that planning use classes, this is true the world over, just reflect investment asset classes, but they are the investment asset classes of the last century, not of this century. I was sort of somewhat encouraged by the introduction of the E-class, the sort of economic, but maybe we should consider all built assets as E-class. If people started to recognise that the built environment is an asset, a fundamental asset, which has the potential to enable economic growth and prosperity, and that placemaking isn't just a kind of nice to have sort of pretty thing to do, it's actually something inherently tied up with economic success, then I think we'll start to find, actually thinking about the levelling up agenda, regeneration agenda, that actually the localities, the local authorities and the planning authorities that win in that sort of environment are those that do recognise that kind of messy, mixed use, actively managed places are actually going to be more prosperous than those that try to adhere and keep sort of bashing square pegs into the round holes of last century's assets.
Yeah, and I think, where we're looking at urban campuses, sorry, I keep going like that and it makes me sound a bit louder, where we're looking at urban campuses in and around town centres, and we go back to some of the old national policy and the PPG6 and town centres and about vitality and viability, and the student accommodation is a key component now, I think, of vital and viable town centres. We're seeing town centres repurposed at a growing rate now, post-pandemic.
You could argue that it's more the students than the student accommodation, unless a student, because we also have seen student accommodation being basically a very tricky place if it's not developed with the placemaking in mind, etc. So that was one of the things that I wanted to also check with you, is like, okay, if you see that thinking, like that more holistic approach to urban development, where do you see that then applied? Is that in the town centers discussions right now, or is it like, for example, in Stratford, where your university is also part of a large redevelopment? Where do you see some examples of that proactive approach?
Very few places, to be perfectly honest, on student accommodation. I do think that the response is a reactive response from councils, because they don't have the policies in place. And that's one of my thoughts, is that they local authorities do need to change their policy approach to student accommodation. It shouldn't just be about controlling it and managing where it goes without actually identifying specific areas, and then how that can be mixed with other uses, which ultimately then will deliver that vitality and viability. And also the placemaking. Student accommodation in many respects is just seen as a single asset class on a single site. A lot of the development, and that's how developments come forward. So in mixed use schemes, it's down to the developer rather than the local authority. There is no pro mixed development, including student accommodation, that I'm seeing.
Yeah.
I think it's quite interesting to, you talk about...
If anyone really disagrees or wants to say something, please raise your hand. I'll bring you into the conversation.
You talking about mixed-use schemes, I think there's a tendency to think that if you've put student accommodation there, a hotel there, shops there, and resi there, that you've got a mixed-use scheme. I actually think that maybe we ought to be thinking much more about mixed use as a class.
Yeah.
And here I'm thinking, for example, about the hybridization. In some locations, it would be hugely appropriate and actually socially beneficial to hybridize student accommodation with hotels. After all, you've potentially got a long vacancy period in the summer, exactly when demand for Airbnb would peak. You've actually got the opportunity to offer an alternative visitor accommodation class and facility for a town. That if you only stick to purpose-built student accommodation, would be an opportunity missed. You could call it the efficient use of land, or you could. I'm a firm believer that mixed-use assets actually outperform because the whole is almost invariably greater than the sum of the parts.
Yeah, and I think coming back to that part about the shared facilities and the ability to mix those up in a single building, a very good example.
And to anticipate on future uses that you don't know yet.
Precisely, but I'll give you a very good example. I've just received this morning a draft decision notice on a scheme in Leicester, where I've got a Section 106 agreement, or a suggested Section 106 obligation that prevents the use of the building other than for students, undergraduates, and only during term time. So discouraging use during the summer period. And you just think, we'll re-educate the council and we'll get them to see the errors of their ways. But that kind of lack of foresight is unfortunately what we come across at the moment. And I think it's just a demonstration really of how the student accommodation is seen. It's kind of I think I described it to you a couple of weeks ago, Frank, as it's kind of the second cousin of the asset use classes in my view in planning terms.
Or clearly not fully getting to its full potential, so to say, of what we can do. An area where we also find a lot of tension, also political pressure, not just on the downsides of things like the increasing flexibility with companies like Airbnb, of course, providing solutions, is the old one, is the affordability one. Do you see any innovative approaches right now across the UK?
Well, I think that what you say, if you can't make the case, and it does show sort of how far we have to go here, that if you can't make the case for the coexistence of the hospitality with student accommodation, then there are so many other synergies with workspaces. I mean, out of our universities are coming some of the best educated, most in-demand sort of young sort of tech entrepreneurial sort of workers, for which there is immense global demand. There should be huge synergies between a body of students and new tech startups or a whole host of sort of enterprises. I think this is where I would suggest that perhaps alongside other so-called operational asset classes, you really need to start lobbying for that economic use case, as it were. And I mean, it would seem to me that you should be able to show that if you can provide, effectively take demand away from Airbnb by making provision during the vacations, you should be able to demonstrate that then frees up space for other types of housing. And I think this failure, the way we pigeonhole hospitality or Airbnb as something separate to and not on a spectrum with long-term residential, I think is positively damaging. So I think there's a really strong case for, if you like, lobbying stroke educating.
Sure.
And I think operational asset classes have to be having these arguments and making the case really robustly. I think, as with, it seems to me with planning, there's always somewhere where you have to compromise. I think, though, battle lines need to be drawn about where you've just got to make the argument. And make it really robustly.
The quality piece that you were mentioning and the affordability, I mean, that again, because there are most local authorities, their policies are archaic when it comes to PBSA, and as a consequence, PBSA is seen as one single use, lack of understanding about the need for affordable accommodation, And therefore, as a consequence, you will find that the development industry will automatically go to the potential greatest value, and therefore the affordable accommodation kind of gets left behind. I don't think so maybe the market dictates that eventually because of the supply that you might provide. But there's no recognition in any policies that I'm aware of in local government where the affordable housing or affordable accommodation could be seen as being something where there's a presumption perhaps in favour, which would be a good way around getting that mix and quality mix.
Well, it was interesting that at MIPIM's conversation on the residential market, it was actually institutional investors like Greystar, Catella, Redefco, where all of a sudden say, and LaSalle, were actually pro affordable housing regulation.
Yeah.
Because they noticed when things got a little bit more difficult, those assets were performing. It was very predictable for them. They have long waiting lists in general, but also their social contract and their issue with defining how they can contribute forced them basically to rethink that issue. And I thought that was interesting also. I don't hear that in council conversations, let's put it this way, to see them as partners of like, okay, what is your risk versus what is my risk, and how do we bring that into the conversation?
Yeah, and developers and investors like certainty.
Yeah, that's what, that was exactly their argument.
Yeah.
It's like, as long as we know it's for 20 years, count on us. Like,
and the British planning system isn't built necessarily for certainty.
Yeah.
Fortunately, because that would mean that I wouldn't have a job.
Okay. Yeah. Well, we don't want that. And we also don't want to take too much time from the next panel. As a closing, Yolanda, if you were to put a portfolio together for an institutional investor for the next 20 years here in the UK, how would you start?
Well, as I tell my students, I think it all depends on the investor. But the plain fact is that real estate value is going to be derived more. Well, it is being derived from operational income. We're back to fundamentals in all real estate. Consequently, you can't just expect the automatic asset price growth that we've seen for all sorts of technical reasons over the last few decades. What I think, therefore, that there are lots of types of demand in places for property that perhaps doesn't exist yet, and or doesn't exist in sufficient quantity. The kind of simple buildings on good street networks in fundamentally good neighbourhoods, which are capable of adapting. So I think first of all, understanding that actually, I think the ideal investment for an institutional investor is to invest in neighbourhood, not in buildings. To actually go back to the basics of thinking about land and how to make a place prosperous. That's real placemaking. That's kind of beyond what's thought of as placemaking at the moment. That means embracing development and being prepared to, as it were, take development returns as long-term investment returns. So long-term income streams is the name of the game. You have to create your own income stream. And I'm afraid everybody, estate agents are right, they have been for a long time, is location, location, location. But what we have failed to do is actually make the locations. Mm-hmm. And I think the really interesting thing about the operational real estate sector is you understand about the interaction between buildings and people. And it's that makes places prosperous. That's what makes the location. So for an investor, I'd say, you're buying land and you're making it prosperous, and in order to do that, you are going to have to do all kinds of messy stuff. And I'd say there are people in the PBSA and other sectors, these so-called alternative sectors, who are much better placed to provide that and manage it for you than the conventional sort of asset classes that you've been used to dealing with.
Okay, so you would buy a whole part of the city.
Yeah, I'd buy a city, or a city that could be good.
Good, a good city, yeah. I think that's what the Crown has, right?
Yeah. Large part of the country, yeah.
Tim, you have the closing. What would be the title of your proactive, positive student Maybe it's not only student policy,
Yeah.
public policy.
It plays to the points that Yolanda was making about looking at a piece of the city as a piece of land and how you curate it, and then how you look after it, and then how you that investment looks at the long term rather than the short term. I think I've jotted down a few thoughts, but the proactive policy is clearly the key, in my view. I think we do need a policy that is much more creative, and a local policy recognition that identifying appropriate locations for student accommodation, we don't get that, and how those could be incorporated into mixed uses. I think a more proactive, encouraging approach to student accommodation, which then sets within that perhaps a mix of quality and types of student accommodation, so that we get some certainty, and then the development industry can respond to that level of certainty. I think ensuring that there is a good level of affordable product out there, and I say that with a vested interest because my daughter's 17, she's going to go to university, she thinks, in a year's time, and I want some affordable accommodation. Sure. And looking at it at the moment, it's not overly affordable. So I think those are my key takeaways.
Oh, thank you. And I would add a laundry machine in the shared kitchen. So, thank you so much, everyone. Thank you.
Thanks.
Wow, what a conversation that was. I'm sure there's lots of questions as well. But because we run a little bit over, hopefully you guys can catch up with them in the networking that will take place in the next hour. I really liked the idea of this idea of policy being unboxed, and I genuinely believe as a community and as a sector, we could be at the forefront of making some of those changes and lobbying the government to create better policy for everyone. So up next, we're going to have the data insights. We have the wonderful Emma from JLL, who's going to take over in a second. And then we've got, we're looking at Housing Anywhere and their really interesting data as well. So give it up for JLL, and Emma, please take the stage.
There we go. Hello everybody, my name's Emma Rosser. I'm a researcher at JLL and I work closely with the Living Capital Markets team. So I'm going to kick off the data insights session, talking a little bit about how we at JLL are using data to provide insights into UK PBSA and helping to unlock investment. At JLL we have a large team working within the student market and access to various sources of data to support and educate those decisions. And in this session, I'm just going to run through a little bit on transactions, data from some of our surveys, our own supply database, and a little bit on performance, leasing, and rents. So despite that, student accommodation, attached, student accommodation and living is notoriously light on data as an emerging sector compared to the more mature asset classes. To give you an idea, our office transaction database goes back to the 70s, whereas, if it works, there we go, student investment really only started to kick off in 2007, and albeit at very low levels then. Now, since this time, we have tracked 50 billion in investment going into UK PBSA, and investment into the UK market has accounted for 94% of European totals. Now, this information and these transactions give us a wealth of information that can help us to understand what will happen in the UK market in 2023 and beyond, and also importantly, what may happen in some of those emerging sectors, emerging markets in continental Europe. So on this chart here, you see the UK being the dark blue, and the lighter beige there, those, the investment growing there within continental Europe. So back to the UK. Between 2012 and 2022, we have seen a huge increase in investment, annual investment going into the market, with a compound annual growth rate of 16%. And this all culminated last year with a record level of investment going into the market at 8.2 billion. Now, it was a record level for all living sectors, but student housing certainly outpaced all other markets. Now, this is largely down to the resilience of living, but also student housing as the largest, most established market, offering an opportunity for investors to buy stabilize assets, operational assets at scale. So all of this has meant that last year we saw the average deal more than double to 105 million, up from 49 million a decade ago. Now, a large amount of this is driven by the very large portfolio deals. Last year we saw 22 portfolio deals, accounting for 76% of investment, and those deals with an average size of 283 million. Those very large deals and very large assets have attracted a large amount of international capital, and as a result we've seen international capital and international buyers make up 87% of investment. A little bit more on that. This is actually a fairly recent trend. Historically, investment has largely been accounted for by domestic buyers. But over the last 3 years, we've seen international buyers taking a far larger share of investment there. You can see on the second graph there some of the key players and the largest PBSA investors last year. Overall, buyers from Asia accounting for 60% of capital invested. Some familiar names there that you might recognize. GIC, obviously teaming up with Greystar to buy the Student Roost platform. City Developments Limited, Singaporean company, a number of single asset acquisitions there, and then some funds affiliated with Temasek buying Singapore Press Holdings, the large substantial portfolio within the UK. A few more, Greystar bought 2 portfolios, one from Downing, and then notably Lone Star's acquisition of 11 properties from Unite, accounting for 4,500 student beds, so buyers buying at scale. Just a few more stats on that. Overall, last year, we saw 85% of investment volumes going to built assets through those very large M&A acquisitions and investment deals. This has all meant that over the past 3 years, over 100,000 beds have traded within UK PBSA. And that reflects 14% of the total stock, half of which sold last year. Those very high levels of trading stock over the recent years have meant that there is lower supply available on the market for buyers to buy. And that will be further compounded by a drop-off in development deals last year. So overall last year, we had seen 14,000, just under 14,000 beds funded through development deals. And that's significantly below the 5-year average of new supply, which is around 30,000 beds. So expecting that that will point to a further supply slowdown for the market, while at the same time we know that demand for students continues to grow. So a little bit more on the investor outlook. Some insights from our investor survey conducted at the start of the year. We spoke to 113 investors and asked, which sectors do you expect to be the most resilient over the next 12 months? And student housing was the most popular response. Interestingly, in contrast here, which sectors do you expect to provide the greatest opportunities over the next 5 years? Student housing performing not quite as well. And that's really down to the fact of the lack of supply and lack of buying opportunities in the market at the moment. And then a few more insights at the bottom there from the survey. Across the broader UK commercial real estate, investors expect transactional volumes to return in the second half of 22. So that's 48% expecting that. Interestingly, 39% anticipating that pricing will continue to soften over the next 12 months, though that may well be related to the fact that 58% also aim to be net investors during this period, with just 7% hoping to divest. So what could they be buying on the supply side? There are 814,200 PBSA beds in the UK, 10 times the UK BTR supply, but importantly, not enough. So over the past couple of years, we've continued to see student demand outstrip growth for PBSA new supply. So over that 2-year period, whilst the UK student population has grown by 9%, the PBSA market has grown by just 6%. And we're seeing far greater growth in some of those core markets that we know have huge demand for PBSA, with international students growing by 23%. Just last year, international students rose by 16%, while the student beds rose by just 3%. You can see a real disconnect there. And if you were to compare the level of international students and PBSA supply, currently, international students, if every international student took a PBSA bed, that would account for 74% of the total market, and that compares to 66% last year. So this is a problem that is becoming more dramatic. And it's more dramatic in certain selected markets as well. Just finally to point out a few markets where we're seeing the increase in students, but an increase in international students, so London, Glasgow, Manchester really standing out there with very high growth, and PBSA failing to reach the same levels of growth at the same time. So a little on performance. All of this and this lack of supply has led to record lease-up levels. So the first graph, January of this year, so this is from the JLL leasing survey. By January of this year, 58% of the UK PBSA beds were already let for next year. And this compares to 48% the same period last year. So that's certainly increasing through that lack of supply. That's also driving an increase in rents. So rents for in-demand products rising amid very high costs. Seeing on that second graph there, rents rising for all accommodation types, and notably studios rising by 6% over the last year, ensuite clusters by 5%. It is very high levels of rental growth, but if you're to compare this to the market, the broader rental market, recent stats from Rightmove have the rents on studios rising by 12% over the past year. So the risk is that if the lack of PBSA and lack of HMOs, if the students aren't able to access that type of accommodation, they could well be forced to pay top dollar for PRS stock, renting a studio. And that's the last chart here, really showing the huge difference in the current pricing for studios in key markets and where students are able to make a saving by staying in PBSA. Obviously, as well, those students in studios are more exposed to high cost for energy as well. So just the last slide from me here. Overall, this clearly points to a clear demand for more stock within the UK, but also within other markets. The UK is actually has the highest provision rate of any market within Europe, 33%. And you can see there on the first graph a number of markets, emerging markets, which really don't compare. Italy and Portugal, around 3% provision level there. So at JLL, we estimate that total unmet demand within Europe and the UK, somewhere between 2 million and 3.3 million. And the second graph there really highlighting the key markets where there is that unmet demand, France and Germany. And you're starting to see the level of beds rising to meet that demand there, expecting to see further investment and further data to educate more trends in some of those more emerging markets. So on the demand side, I will now pass over to Martin. That was 10 minutes.
I realise as well there's quite a few of you taking photos in the back. Don't worry, we will share these presentations afterwards. We also do have a recording as well, so you can go back through this. I'm going to hand over to Martin now, and then we're going to have 10 minutes at the end for you guys to ask some questions to Emma and Martin. So please also keep that in mind.
Thank you. Hi everyone, and good to see you all today. My name is Martijn de Graaf. You can call me Martin in Dutch. And I've been working with Housing Anywhere for 5 years now. We exist since 2009, Rotterdam based. And we are an online marketplace, a bookings platform. And we started by building our company by helping our partner universities and their international students to rent out the place and find a new place abroad. And since then we've developed to where we are now. So just already put some numbers. Last year we accommodated 130,000 people across Europe, and we're doing that with a team of 260 people, all working from Rotterdam. And today I want to walk you through some data that we're seeing on our platform. So no surveys or anything, just our own data I would like to make some comparisons as well with the UK for what we're seeing, but also with the mainlands. Since we're just launching in the UK, we have a lot more comparison data there, but I hope today you can take some learnings and some key takeaways. First of all, general demand. What we're seeing is that, from what we're seeing here, that the international demand is increasing rapidly in the UK over time. Way quicker than the local demand, at least from where they're coming. And I want to show you that where they're coming from, the country of origin. I would just like to show you that on the next slide. Because here we can see where the people are searching are coming from, and by this I mean mainly the students. So you can see a huge development from the UK actually. Whereas we typically house or accommodate international students, we see a lot of people coming from the UK searching in the UK. And second place is now taken over by the US. So several researchers have shown that there's more and more interest from international students to actually move abroad, where else than in beautiful England, so they can stay with their own language. Aside from that, we see India on the 5th place, and you might be thinking, hey, why I don't see China or India not on the top? That's because we have we focus our demand basically only, or let's say our marketing budget and our outings and our partner universities only within Europe. As of now, we're actually also launching in the US, so who might know that will expand. Next slide. So what is the preferred accommodation type, what we're seeing in the UK? Aside also from PBSAs. Private rooms. At least that's what they're searching for at first. So this is not what they're booking via our platform, but what they're searching for at first. So they come to our platform and they search with certain filters and they search for a private room. And we have some assumption why is that, but I can show you that later. This is actually increasing. Hope you can see it, that over time. The number is increasing. So it's still the most preferred option over apartments and studios. If we look at pricing, so what is the spending trend for accommodation in the UK versus the mainlands, is we took some pricing brackets, as you can see here, and in the UK compared to the mainlands in Europe, it's like one bracket further or higher in pricing than the rest of Europe. And this is all in euros, by the way, not in pounds. So yeah, we could say that the UK is an expensive country to study in, no surprise. But what is surprising is that in the mainland of Europe, the pricing ranges remain kind of stable, whereas in the UK it's increasing rapidly, the pricing. And if we take back the slide before, this is basically a combination of all accommodation types that they're looking for. So we could state that there are many students looking for a private room as of now between 600 and 800 euros. So how has demand been evolving over time? Well, we see a much more higher increase than any other country in Europe. Every year it's increasing by more than 100%. And as of our platform, we see a lot of demand coming in the high seasons, where the proof of enrollments are being accepted right by the universities. And that's also for us the most busy period, and we see also the most bookings. And that's the combination of the UK and in the mainland. So I know that for many PBSA operators that are in here, that they're already fully booked already for the next academic year. So that's also for us something to look into, how we can help those providers as well to generate the demand earlier. Now, what type of accommodations are they looking for? This, again, I don't think it's really a surprise, but more of a confirmation for everyone. And this, again, I want to emphasize that this is what the students are filtering on our platform. So we could say that furnished accommodation is still of the highest demand there. So please keep on doing that, keep on offering those accommodations. And yeah, we also see the same in the mainlands of Europe. So how long does it take to rent out an accommodation in the UK and mainland? As a platform for us, driving conversion is very important. We want to, if you see it as a funnel, we want everybody to run through this funnel as soon as possible, to have a maximum experience for tenants, but also for our advertisers, which can be PBSAs. And what we are seeing is that a few years ago, we saw that 43% of students will book a place within 5 hours. During COVID, it was actually a lot higher. Oh, sorry, 5 hours, 5 days. We also see 5 hours, by the way. Why is that? Because of urgency. When can I book my flight? Am I going to book my flight 2 or 3 years, 2 or 3 months in advance, or do I just only 1 week in advance? But we can see now that it is after the pandemic that this has stabilized again. So we're happy to see that actually. And on that note, I hope you have can take some takeaways and some key insights from a marketplace such as Housing Anywhere to operate your business further. I'm happy to discuss further on this matter. Thank you.
Okay, guys, thank you so much for joining me. You okay? You all look a bit scared.
Massively scared.
Oh, it's okay. They're not scary. Don't worry.
I don't know.
I think it would be great to start off with Kristen. Do you want to tell us a little bit about yourself and about CA and why you're here?
Yeah, sure. It might work. Yeah. Christian Davis, work in the UK PBSA sector. I've been working in the sector for about 13 years now, exclusively in acquisitions and development roles. So bringing sites through planning all the way through development up to operation. Work at CA Ventures. CA Ventures is a large US-based vertically integrated business. So it takes sites all the way through planning, development, operations and asset management. In the US, we have about, I think, 16 billion of assets under management, a lot of which we've developed ourselves with our institutional partners, but that is across PBSA, multifamily, and senior. In the UK, we landed here about 2018 when I started to build a pipeline. As it stands at the moment, we have about 4,000 beds operational across Europe, got about 2,000 beds in a pre-leasing development pipeline, and probably over 2,000 beds in a subject to planning development pipeline secured as it is.
Amazing, thank you. Charles?
Afternoon all, I am Charles Gallagher. I'm Director of King's Community Business Services at King's College London. My remit looks after our catering organisation. I look after King's Sports and King's Venues, and the reason for me being here today is I look after our residences as well. At King's, with 35,000 students, and we operate 5,500 beds, of which we own 28%, and we work with third-party partners for the other 72%.
Amazing, thank you. Maria?
Hi guys, I'm Maria Hatch from Greystar. So I'm our Senior Director for all B2B business across Europe. So I look after our nominations agreements, all of our corporate lease agreements. I often work with King's and UCL and our local partners. The reason I'm here today, I think, is we've acquired Student Roost, and it'd be interesting to get people's thoughts and to share a bit of knowledge about that. But equally, I look after our student welfare platform across Greystar, so being both chapter Canvas and now involved in Roost. And it's quite interesting to speak to people about development and cost of living crisis and how that has an overall impact on the industry.
And finally, Richard?
Hi, I'm Richard Stott. I'm the Group Managing Director of the Skill Group. We are in the UK. We've been around a long time, 1978 in student accommodation. And then in Germany from 2006, we've got a couple of brands. We have the University Quarter, and we are a wholly private company. We have no external shareholders to tell us what to do, which is obviously a mistake or fun. And so we're only 2 directors, and so we're a little bit smaller in 9 cities in the UK. And we used to be in Berlin, which was really cool, but we're not there anymore, sadly. It's got too expensive. We had to sell. Rude not to sell. We're mainly around Dusseldorf and Dortmund.
Amazing, thank you so much. So today's session, we're particularly interested in looking at the living cost crisis that's happening at the moment and how that's impacting students. So really delving a little bit further into what affordability actually means. We're also going to cover a little bit of kind of policy. As that first session, we hear the challenges that we're facing in terms of policy and planning, but then also what's actually then, how that's impacting us on the ground here. And then finally as well, completely blanked them for a second, we're also going to talk a little bit about the supply and demand that's happening and how that's really driving some of the key factors in the sector across the board. So what I want to do is I want to start with Charles. So Charles, what does it mean in terms of affordability, and how is that on the agenda for your students? Like, how are you driving that agenda forward?
It won't be a surprise to anyone that there is that cost of living crisis there that is affecting all the students across the UK and across the world. Within King's, we a few years ago started a scheme called King's Affordable Accommodation, known as CAS. Within that scheme, we offer 22% of our 5,500 beds to students at a rate of £169 or under, and that's based on the NUS guidelines for what affordability is. The only criteria around about that is that the student's household income is under 42,875, and that's the only thing that we ask. The whole idea in the beginning was to help out students, obviously from an affordability point of view, but also from a widening participation point of view, to encourage students that normally wouldn't be able to come and stay within university accommodation to be able to do so as well. That's obviously an awful lot wider now as well. Each year we work closely with the student union when we are deciding our rates, and the key factor that we look at is affordability for our students. Working with so many third-party providers, it is difficult to be able to get that affordable accommodation. With the 22% of our stock that we have, we spread that against all our 12 portfolio, so that it's not actually just making it within one particular or two particular buildings. So we do a lot of work around about that, but it is having a knock-on effect onto the students' experience as well.
Yeah. Just to put it into perspective, I was reading a statistic from NUS that stated 12% of students that are studying at the moment will be homeless at some point during their studies. So that's a really scary statistic. But it's really interesting to see that, you're not offering all affordable rents, that it's also got to be kind of, split across the diverse portfolio. But I do think that we need to change the lingo around affordability, because affordability is relative as well to the person and where they come from. But I do think there's also, we do need to identify that, that it isn't sometimes, it shouldn't always be off the parents' income as well. These are young people that are living their own life a lot of the time in these buildings. So I think that's also something that's quite interesting.
The scheme at the moment, and we are reviewing it this year, doesn't apply to postgraduate students, and we have found an awful lot more postgraduate students, obviously with the current crisis, needing accommodation. But we do have rates round about that £169 that you can have. But as you say, £169 to one person is very different to another £169 to another person.
Absolutely. Maria, I wanted to come to you and talk about whether you're seeing kind of anxiety amongst your tenants and whether that's maybe impacting your kind of operational, Greystar's operational operations.
100% we've seen anxiety levels rise. I think it's a really tricky question because you have to also take into consideration the time of the academic year. Students, pressures that students are under, whether they've just arrived or they haven't. But however, we have seen a rise in welfare cases. I think we've actually seen a decline in people wanting to speak about welfare cases directly. And we've done some research on that, and I think one of the main reasons is actually people feeling embarrassed. So a chapter is perhaps a good example, but sort of 13 building zones 1 to 2, there's a real mix of quite affluent students and students that aren't that affluent. And it might be quite tricky for a student to come to the front desk and say in front of their friends, can I have a discussion around an instalment plan? Or can I speak to you about not being able to afford X, Y, and Z? So I think there's definitely been a rise in anxiety. I think what we all need to do as an industry, and I know everybody is doing it proactively, is really look at how you can deliver a service that isn't necessarily just assuming everybody's student you know, student welfare trains, because I think that was a bit sort of like yesterday. It's what can you do to ensure there's a safe environment for your students to come and speak to you, and how do they have 24/7 support in their language or where they feel comfortable to be able to discuss that, because there is a massive link with financial pressure and mental health, and it's really something that it's going to affect them more than it ever did us, you know, at that age. And it's like, you know, the word affordability probably needs to be looked at, because it is so, you know, so relative to that person. But I absolutely, you know, the universities are really stepping up in things that they can do, and, you know, from a PBSA perspective, I think bursary schemes and working with universities with development and ensuring that you can have that relationship and that you can proactively look at the 5-year plan is very important.
Yeah. I know we do have some universities in the audience as well. I don't know whether you guys are also, you know, this is at the top of your agenda as well. It would be really good if anybody has anything that they'd like to kind of add to that. I think Warwick's also just left as well, which is always a good sign.
Could I just add up to that? What we do, because we're a staff-heavy business, a long-standing staff-heavy business, we train everyone, the cleaners, everyone, maintenance guys, we have a few food outlets, etc. And they are our spotters, the people on the ground who say, well, she hasn't been out of her room for 2 days. That could be an issue. Yeah. And that seems to be, because we did subscribe to a, it was Ensley did it, a sort of a mental health hotline, which I paid for. And then it came back to me after a year. I said, well, who's rung? Nobody's rung it. Nobody rang the bloody hotline, which I'd paid for. So it was much better to have the sort of the mental health suicide train.
You know, young people don't call anyone anymore, that's why.
That must be it. I was ripped off. Completely ripped off.
I'm just
that premium back.
Nobody from Ensley's at the back.
Well, I don't mean it. It's just no one rang it. That was a great idea, but nobody rang it. Maybe they were all too happy. Sorry.
No, it's okay. I was just thinking of my 18-year-old sister and will not call anyone. She has so much anxiety around it and will text everything. Okay, well, talking a little bit about, so that obviously integrates into the price point. So I think it's, I'd love to speak between CA and KEXCO, because you both have different approaches to kind of the price point and how you look at that. I know that CA has got more, is moving more into kind of dynamic pricing, and I know there's a lot of pressure from investors in that. And then I know KEXCO have got very much a set rent across. So it'd be interesting to hear about why that's important to you guys.
Yeah, sure. I mean, I guess starting off, I mean, CA choose to operate in the premium end of the market. So controversy or not, we go for that kind of top sector. There's a lot of international students there. It's where we kind of have the skill base, the experience in the US of letting to that market. So that's where we kind of see our niche in the market, where we can deliver product and ultimately, for my role, in acquisitions and development, get it to stack from a viability perspective and get it built and away. In terms of dynamic pricing, yes, we do dynamic pricing. I mean, at the beginning of the year, we got a lettings velocity curve that we want to hit, and we want to stay on that lettings velocity curve. We don't want to be tracking underneath it too far. We don't want to be tracking too far above it. But I think it's a sensitive thing. I mean, I don't think dynamic pricing, we're not Ryanair. We don't dynamic price on a daily basis. I think we will adjust at different points in the market cycle, we will adjust our rent to try and stay close to that curve, whether it be down or up. And at the moment, it is up because demand is so high. So, but we have to be conscious to the city and where the lettings curve is, because we might be underneath because it's a late letting market. So we can't choke off demand, because we can't get to that end point and have any vacancy, because then if we dynamic priced our rents up and we've got any vacancy at the end, we've completely eaten all of the benefit of doing so, and we should have stayed on the curve. Yeah. So I think it's a fine balance of how to get there, but certainly at the moment we are predominantly international students. We don't, we're letting well, and in terms of affordability, I don't think it's affecting that cohort at this point in time.
I think it's really important though for as a sector though that actually also having those premium type of rooms are important for affordability, for me anyway, in my eyes, because those products are extremely popular, and actually they free up a lot of the stock that we can then have at more affordable rents. So again, I think it's important to have that diversity in portfolios so that there is something for everyone. I think actually, if anything, we need to diversify it even more. So there's a real, I think, market for that middle market, which is kind of more where KEXCO is. So can you tell us a little bit about your pricing strategy?
I absolutely get where you come from. You're in a market segment which isn't our market segment. when I'm staying here for the weekend, it's the London Marathon weekend, so I know I'm paying more for my hotel. I'm only paying it for the weekend, I'm not paying it for the year, if you know what I mean. Because we're a sort of returning student provider, so a lot of our locations are fully let for we set our rents in September, and then we start letting, I'd like to say September, but Matt from UPP over there is shaking his head, don't do that. We do, we just start letting whenever we can. And then we mainly let, some of our locations are full for the following year in November. And it does make you think, I could have put them up a bit more. But we don't. We set our rents in September, and that's it. And it kind of, we're not in your segment, and it kind of feels a bit wrong. I remember a long time ago when Opal were struggling, and they halved all the rents before they went pop. And so some people were paying at the time, say, £150 a week, and others were paying £75 a week in the same cluster flat. It's kind of wrong.
Well, why is that, Richard? Why do you follow that? Why do you not put them up a bit?
We're just so nice, Christian. Yeah. I think we set our rents, we know where we are. I mean, we caught a cold. We caught a cold with energy prices. I didn't expect Ukraine to be invaded. You know, that's hurt us this year, and we've lost money this year. But we set up rents, and I want to be, when the locations say Nottingham's fully let for the following year in November, I feel, well, bills are paid, it's all sorted, fine. And I just personally, and my fellow director, we just don't feel that comfortable.
Yeah, it's completely...
in a cluster, people paying different rents. It's all right in a hotel for a weekend, but for the year, it kind of rubbed me up the wrong way a little bit. But you're in a different market
I
segment.
mean, the guys in the Gina and Matt, we'd be shocked by our institutional investors if any kind of, if we'd filled in November, if we're letting too quickly, is put it back, don't leave any rent on the table, keep going. It's not our money, other people, we're the kind of conduit, we get it built, we get it let, but it's not our equity, so, we're beholden to the people that have enabled the development to come through, and they want as much money as they can get, or return.
We've got bank debt, and so when we do our quarterly report to the bank, we'll say, well, actually, we're fully let there. Oh, fine, tick. And they would look at very closely at our forward let statistics, so why have you held back there? Oh, we're waiting for more money. I don't know. Maybe we're just too scared.
Maria, what about you? What are your thoughts?
No, I'd be shocked. No, I actually, personally, I'm actually quite torn on it. I think I can totally see what you're saying. So you've moved into a 5-bed cluster, your flatmate's paying £100 less than you are. The reason I think that it's perhaps a missed opportunity, but again, appreciate the two very different models, is that up until probably COVID, the leasing cycle really shouldn't have been a surprise to anyone, right? If it was international students coming from China, you knew when the peak was. Same with Indian students. Like, COVID has changed that, and we've seen now, and we're going to probably see a couple of years of not 100% knowing what's going on. And obviously there's a supply issue, so that adds on top. I've worked for Greystar for a very long time, and we obviously follow very similar models. I do think there's a responsibility, though, to make sure, well, corporate responsibility, to make sure that if you're running that model, rebookers need to be really looked at, how that's run, students that have stayed with you for 2-3 years. Are you looking after students that have lived with you and then sort of just like you're on the street, so you keeping an eye on them? So however you decide to run your pricing model, and I guess this is a bit of a get-out clause with this answer, you just need to make sure that you are running a full package, and that obviously is with you both, so it's nice.
I also think though, in terms of, I think because there's so many barriers even with like licensing as well, that you can't, with contract lengths, and then can you use those rooms when they're empty for hotels and all of that sort of thing, actually does put pressure on, and I think is why it's moved more into the dynamic pricing, because it's difficult to keep up with everything. The amount of services and operational costs that come into play with running BBSA. I do also understand that as well, but it's quite difficult for them.
Yeah, and I think even the short stay model is now something that people look at a lot very differently, whether that's post-COVID or not. But there's a lot of platforms out there that will help you fill up your 43 weekers, and when they come to the end, or do you put the 51 weekers in and keep and know what you're doing. But ultimately, because of the demand coming into London, there is money to be made, and that is how people will see that. And it's like the hotel example over the marathon, you know, like the prices are going through the roof. It's going to be the same in London over certain weekends with conferences and whatnot. So that is the market we're in, you know.
I believe we've got a question. Onima, do we have a mic? Very small little legs, come on. At the front here with Jonas.
Thank you. I'm Jonas from Coley. On the topic of dynamic pricing, have you been measuring any differences in NPS scores between dynamic pricing and ordinary pricing?
Do you want me to say that?
What's an NPS score?
Yeah, oh, sorry.
Net Promoter Score.
Oh, right.
So, customer satisfaction. I'm sorry.
We haven't done too much research on it, so I'd be lying if I said I did. However, we do a lot of research on higher price room versus, I guess, like both ends of our stock. The difference, I think, with the higher price rooms is that sometimes your customer service model has more expectations, and that could be for a number of different reasons. But I haven't seen a huge fluctuation enough to call it out as a data point. But again, we haven't done that particular piece of research.
Thanks.
Nothing from me, not my specialist topic.
Anybody else in the audience that might have? Yeah. Lee behind, yeah.
I was just going to say that. So, Lee Rollinson from Homes for Students. We operate 19 brands, and just to answer your question, yes, we have. So, our Prestige student living brand, which is more studios, ensuite, high-end, new builds, predominantly. At the opposite end of the scale is our Essential student living brand, and that has been a runaway success in terms of NPS, purely on the affordability side. So that is the only tangible stat I've got. So NPS of that is 58 on average, which I'm being told by our colleagues in marketing is good.
Fantastic.
If that's any help.
Thank you so much.
I have a question as well.
Oh, sorry, yeah, please.
Do you think dynamic pricing poses an ethical concern if the students, if they're not aware, if they then become aware and they then choose to browse privately, and then you can't really implement dynamic pricing because you don't have the data based off the students going private online?
You mean like through like an incognito?
Yeah, so is dynamic pricing just an ethical concern for viability for long term?
I'm not sure I really follow the question.
So if dynamic pricing is based off the activity of the students and how often they're looking at accommodation and what's going on in the student sector, if students aren't aware that you're using dynamic pricing and then they do become aware that you're using dynamic pricing, is that not an ethical...
It's not my specialist topic, but it's not my understanding of how we use dynamic pricing. Is probably, I think the word probably doesn't fit what we're doing. So if we get to a certain point in the letting cycle and we're going too high above the velocity, we'll just put the rents up a bit. We won't look at where the students are searching. It's purely to maintain that letting curve so we can prove to our investors we're not running away. We're not going to fill too early and leave rent on the table. Or alternatively, if we're under that letting curve, we're like, we need to fill, we need to take some rent off. So we're not doing any kind of clever searching underneath the bonnet in order to pick out those students and do the dynamic pricing. I think maybe you do get that with your Ryanairs and your pricing, which is much more sophisticated systems. We use the term dynamic pricing, but I think only to say we do move the rent.
I think there's two different markets in which Christian is more international, probably more first years for where we're returning students. So initially you get the larger groups, there's 5, 6, 7s because they've all made the best friends, and then they all sign together and it's like a herd mentality. They do sign, they see other people signing and they all want to sign in fear of missing out. And then it gets to the smaller groups, and that's how it happens. And I think there's Richard from Students. Is that how it works on your website?
We've got a mic coming.
I know you put me on the spot. Yeah, certainly early in the letting cycle, kind of October, November, December, it's certainly larger cluster sizes from second and third year returning students who would typically look for a HMO. Interestingly, most PBSA can't accommodate that properly because they don't necessarily have the ability to take a 6-bed booking in one go. And then certainly as you go throughout the season, you're going to find more 1 beds, 2 beds in demand later in the market, which is going to be aligned with international demand essentially.
Just to Charles then, in terms of from a university perspective, is pushing the market to maybe students to start getting accommodation even earlier than they are now a concern to you though? Because there is a higher percentage that they might drop out or change their mind, if they're going through the application and they maybe haven't even enrolled yet, but the market is pushing them to do it much, much earlier. Is that a concern to the university?
From an accommodation perspective?
Yes.
Yeah. From an accommodation perspective, as mentioned, we've got 5,500 beds, but we've got 35,000 students. So we would then look at a different type of marketing campaign. So we would look much more at returners. Our market is very much first years and postgraduates. We have a small amount of returners, but again, we can then turn on that tap. If we saw that happening earlier, we could then start that marketing campaign earlier. We obviously do a returners campaign every year, but we don't put that out normally until about May, June, and at that point we know how many we've actually started getting a baseline from our normal business, for want of a better description.
Okay.
But one thing that I would say, obviously, from a university point of view, that's why we work so closely with our third-party partners in securing those prices. So we have those nomination agreements with them, so we're guaranteeing them, as you all know, that we will pay that price. So we wouldn't then fluctuate the price from a university's point of view, mostly from an ethical point of view as well, obviously, from the fact that all our students get the same experience.
Maria, obviously working with the client relationships, I'd like to kind of pick up a little bit of that. I think Unite put their report out, I think it was last week, and stated that there's been a drop from their side in terms of nominations agreement, and there's been a bit of reservation around doing these types of agreements. Are you seeing that? And are you seeing maybe universities pull back and be a bit more reserved in that way?
I don't think the universities have pulled back. I think the PBSAs have pulled back because typically, again, pre-COVID nominations agreements came with a discount applied, or depending on the length of the contract, you'd be able to figure that out. And there were there was loads of different ways to do nomination agreements. I'm actually just thinking, who are my clients in this room? But I think because there's no rooms, people want rooms and people are willing to pay a bit more at the moment because their students need to have that level of guarantee. I don't think it's the universities that are necessarily pulling back, but I do know that we're in a position where the tables have maybe slightly turned and PBSAs can say, yep, we'll work with you, and to Unite's point, maybe not on a 10-year contract, and we want to give you our offer rates rather than a 5% off for a 3% or 3-year contract, because we don't quite know what's going to happen. And one thing COVID taught everybody is that you just don't know what's going to happen. And when you were in very long agreements, the phone was picked up on that 23rd of March and that people were having those conversations. But to the point of ethical rents and how that perhaps has been quite difficult in my role, the universities do guarantee prices. So if you're in one of our buildings and King's have got 100 beds and then they're all en suites and our en suites are starting at a very different price, that typically seems to be the question. Like, I've enrolled at King's, I'm a first year, why can't I have accommodation just because I booked 4 months later at that price? And that actually is going to be a market concern. And it is, but it will be vocalised more and more as we go through it. So that's where the partnerships and development deals need to be really taken into consideration so far before these deals are done. And I do know with the SUs now getting more involved in nomination agreements, that is very, very forefront of everyone's mind.
To that point, Kelly, I think it will be to do with the rental indexation that the universities require you to cap to. So that was quite attractive pre-COVID. You'd say, well, we'll cap your rents between 1 and 4, 2 and 5, but we'll take a 10, 15-year agreement, and you'd be like, fine, I mean, inflation's going to stay around there, so that's a good deal. We'll take the yield contraction, we'll take that deal. But now, institutional investors will be like, why are you doing that? Why would you, the yield contraction is not going to happen because there's softening in the market. Do not cap your rents. Don't go with the university. They need the beds anyway.
Yeah. And that's definitely our concern as well. The fact that in previous years we've had caps and collars, whereas for future negotiations we know that luxury is not going to be there. And we've got that risk. So this year when we've been doing our pricing model, we've increased slightly more than we normally would have, because we know when we start going through negotiations over the next few years, that we're going to get hit with higher rents, guaranteed.
We've got another question at the back over there.
Yeah, hello, it's Ollie from UCAS here. What are you going to say, Richard?
Oh, I was going to
Makes
say,
me nervous
sorry.
when he does that. Yeah, really interesting to actually see PBSAs and university providers on the same stage. Often you don't get to see that, so it's good to see a mixed view. The nominations bit actually intrigues me, and how the landscape might change. You might have seen over LinkedIn and UCAS's channels that we're projecting there could be up to 1 million applicants into HE by 2030. The journey to 1 million. Do you think this increasing demand and outstrip supply issue might have quite a big say on how nominations agreements between PBSAs and universities work for the short, mid and maybe long-term future?
Yeah, I think it will definitely have an effect on it. I think nomination agreements are eventually probably going to become something more of the past, and they're going to be flexible agreements between universities and PBSAs, and whether that be marketing referral agreements or guaranteed development agreements, that will change. And to the point of, I guess, the tables have turned, and PBSAs now can be slightly more arrogant around, we kind of know we're going to fill up. Sort of 98% occupancy isn't a big deal this year, probably won't be next year. So what do we do to make sure that students have somewhere to live, but equally we're not just giving everything to really affluent students? And it's a really thin line, and it's something that all PBSAs really need to plot out in their marketing plans with universities before you open the leasing cycle. So those partnerships now shouldn't just be a partnership if you have a signed nomination. It should just be a partnership full stop, because everybody has a responsibility to provide housing. So yeah, I'll stop before I really go on. Yeah. That could be a very long speech.
Maria. Anything else you want to add to that? I'd love for us to talk a little bit about the, you know, you've had a lot of experience in terms of the policy implications that are happening. Like, what, you know, talking about all of this, where are the challenges, and what's the role that cities should be playing in this, and planners?
Well, yeah, I think there's the biggest challenges to development and getting student housing accommodation built at the moment is, one, viability, and two, the policy background, because they kind of work together. We all know there's a viability issues with costs rising, rents are rising, but cap rates are moving out. You know, not a lot is stacking up at the moment. But another really big factor is policy, especially things like the London Plan. So I take the example of Wick Park, which some people have been around today. We bought that site back in 2019. It's got a 35% affordable requirement under the Section 106, and it has to have a majority nominations agreement. So we've got 51% nominations agreement with UAL on that scheme, because we had to. It was really difficult land purchase and closing, because both your equity and your debt will not fully commit until you've got that nominations agreement in place, because it's a Section 106 obligation that you're in default if you do not have that agreement in place when you come to open. So it's not that you need it when you open, you need it before you even break ground or start on the site. So we were put in a position where we bought the site, but obviously UAL knew that they were kind of the only party in the town that would take the agreement at the time. You know, and Matt Chandler's now on speed dial, the guy, gentleman at UAL, and he was like, I don't want partial floors, I'll only take full floors. So actually it's not 51%, it's 56%, or how many beds you can give me. Can I blend those rents? Because we had to negotiate the 16% to get us from 35 to 16 to get to 51. The affordable rents are at 180. The beds in between at 16% are at 250, so there's a big difference there. And our direct let beds are at 380. So he's got his own problem internally that he's trying to get the LLDC to fix, to say, well, can I blend the affordable and the other 16%, so I've got a blended, so there's no difference for my students? So no, you've got to charge. Section 106 says no. So he's come back to us and said, well, can you help me here? What do I do? So, well, we can't help you. We're going to get the 49% away as much as we possibly can. And he's like, well, that's double the rent. How do I justify that? I was like, what? London Plan says so.
Yeah, and I think that's happening not even just only in London though. Quad, Tim, who spoke earlier, I worked on a project with him when I worked at Unipol called Carlton Hill in Leeds. It was 606 bed. We had a massive issue with scale anyway. Getting it through planning was dreadful, even though it was an affordable scheme. It had mental health at the heart of it, had loads of community space, but for the wider community as well. And actually, without the university backing it through the application, even though they didn't want to create the underwrite agreement at the time, they had to, or they wouldn't get the beds. So maybe this is the way that kind of nominations agreements will change into, because I think in terms of being a private provider, that needs to happen so much earlier now than what it used to originally. I don't know if you're seeing anything like that, or...
Not particularly. I mean, the thing that's really impacted on the market and incomes coming into universities and a lack of dialogue between universities and local authorities are the massive growth in postgrad, international postgrads coming into the country. And they're not housed by anybody in this room particularly. The huge growth in Nigerians and Indians coming in, there's an affordability issue, and they're coming into certainly the lower and middle ranking universities in thousands. They turn up and there's nowhere for them to live. They fill the markets, they commute 30, 40 miles to the accommodation, but they're actually generating 15 grand minimum a pop for the year. When you've got an extra 4,000 coming into a university, that's a reasonably high number. But there's no foresight and there's no actual dialogue. I was in a conversation this week with a local authority and a university. They haven't really considered it.
No.
They just want them there.
Yeah, and also as well, their needs are so much different. A lot of these postgraduate students are bringing their families along as well. And, you know, we had this conversation, didn't we, that they turn up with their families expecting housing to be readily available, and it's just not.
Yeah, it's not something we don't look after postgraduates and families. That's not something we do, but we obviously have families turning up, and what do? So we refer them to University of London, and then it's still our problem. We still need to solve it. We've had one or two families that we've had to put up in hotels until we get it sorted.
Yeah, yeah, and I remember you saying earlier on that, you know, people had turned around and said, you know, I need accommodation.
I walked onto a campus near me. I had a suit on. I look old. I was surrounded in September. Right, we're here. Where do we live? I don't know where to work here. Go see the accommodation office. And we work, unbelievable for me, I work with the local pastor in one of our locations because he guarantees rents for families, for Nigerian families. And what I'm having, a meeting on Monday with the university and say, we're on a real problem in our library because it's open 24 hours. So I've got 2 lectures to go to in the week, so they come there, the family, and they sleep in the library.
Yeah.
So they've got to have security put them out, and then the library becomes a creche when they're going to, it's all interesting things Unipol keep bringing me up and telling me about.
Yeah, I'm sure
well.
they do.
So
Yeah.
it's an interesting dynamics of the market.
But there's a disconnect between planning policy, the university, and the developers. They're not intertwined. I can't get London developments off the starting blocks now. I see opportunities, I pursue them, get planning, but I don't know if I'll get nominations agreements, so I can never start them. There'll be the demand for them. If I built the beds, I could get them, the rent would work, that the development would be viable, but I can't spend the risk money not knowing that I've got a university on board. But the point, I need to either purchase a land or draw the debt, because everyone will say, well, where's your nominations agreement? So I haven't got one. Well, policy needs to be that there needs to be an objective test that we can hit, either 35% affordable plus a majority nominations agreement, or 51% of an affordable rent. It's an objective test that you can hit. It won't look nice, but you know that you can start your development. There's now, what the banks and the equity don't like is that you could just, someone could whip this from under your feet and say you're not occupying.
The thing with that's quite difficult and quite conflicting really is that I agree it can be very difficult, but and I can understand a lot of universities would say, well, you haven't been in contact, you haven't spoken to me because you're filling up your dynamic pricing, you're doing X, Y, and Z, and now you want to have a conversation about a nomination agreement for 3 years' time. So there's an element of everybody keeping lines of communication open because it benefits the student, so it shouldn't matter. And that's my point. It shouldn't matter if you have the nomination agreement. We should all just be talking fluently anyway, not just because we might all want to do deals in the future, but just because we should. And that makes those conversations a lot easier. So I think it's difficult with development, but the conversations are easier if you have the relationship.
I don't think universities can help us. I mean, if I came along and said I need a nominations agreement, say, well, my balance sheet is tied up. I can't give you what the London plan says you need. Well, I can't give you any beds because I can't get a development along. If the wording of the Section 106s was more friendly, or at least enabled the development, so you've got to have a relationship, but it says, no, you have to have a majority nominations agreement. Sometimes it doesn't say for how long. It's the university's like, is it for 1 year? Then if they disappear after 1 year, do I need another one from another university the next year? How do you deal with that? The lawyers kind of jump all over all these different questions, and in the end you're like, well, I can't get there, so it's just not clear. It's not It's not allowing beds to come through the system, especially in London. So developers, it's not the same for Unite because they've got more beds, more university relationships, but for a lot of developers, they were like, well, we can't get off the starting blocks. We can't deliver the stocks. There's always going to be they created the policies to try and fix the problem. It's made it worse.
I agree. I think universities and developers obviously need to talk much closer together, but I do think that universities at that point need to have a better say as to what that building is going to look like.
Yeah.
Because there's the amount of developers that will come and say, I've got this property and it's got 400 studios. Do you want it? Doesn't work for me. And as someone mentioned earlier on, it is location, location, location.
Yeah.
And that's really important to students, and we mentioned earlier on that students don't mind. A lot of students, although it's affordability is an issue, we've got lots of students that are paying between 169 and 495 for a room, but they want that flexibility and choice as well.
Yeah.
So it's got to be able to work with the developers to be able to offer that range and prices as well, and facilities.
Just make sure there wasn't any questions. No, yeah, and I think Yolanda said something really interesting today, which was, we need to reclassify the asset in the policy regulations, or we're going to keep facing these barriers as well. We need to move it into a different, it needs to be seen as residential and not as PBSA, and I think that's something that would ease some of the issues that you have in terms of the policy and the planning. I'd really love to discuss a little bit about the student roost and that acquisition there, and what that means, I guess, for Greystar.
Yeah, student roost has kept us very busy. That's what it's meant. No, it's great. So yeah, we have acquired student roost, so that's added 23,000 beds to our portfolio. So we now have Chapter, Canvas and Roost. All three brands are being kept separate and will remain to be kept separate. For us, it's really been very much a period of onboarding everybody from Roost, and honestly, lessons learned, operational practices, policies, the lot. So we've learned a huge amount from Roost. I think they're a great brand. Their student welfare platforms are fantastic. The way they look after their staff is incredible. So it's been great for, I think, Chapter and Canvas to have that insight and to understand that a little bit more. And they're obviously very regional, and it's not something we're that used to. So looking at different markets and different university partnerships has been very interesting. So yeah, it's kept us busy. I think for the future, Greystar are probably going to be looking at bringing forward sort of 4,000 student beds into their pipeline quite swiftly.
More.
There'll be more. But I think everybody's keen for the deals, and everybody's really hungry for that at the moment. So we have our Chapter London Bridge development coming on board in 2025, and that's our focus, which is right next to King's. And Roost have stuff in the pipeline, which we acquired along with the acquisition. So yeah, it's a super exciting time for us. And like I say, having 3 different brands, 3 different messages, 3 very different demographic bases. If anything, it's just made us really look into sort of data being key and understanding our residents that bit more, which I'm really excited about.
Yeah, I'd love, Charles, I know there's also a growth strategy with you guys as well. Do you want to tell us a little bit about that?
Yeah, our pipeline, we're looking at an additional 1,000 beds over the next 4 years, but that most definitely will be with third-party partners. The university doesn't have any intention in tying up capital with student accommodation, and all our money obviously goes towards education and our research, and that's what we do. So we do need 1,000 beds, but again, what's really key from our relationships with our partners is that we offer our students the same quality of service, whether that's within our own halls or whether that's within our third-party halls. We've touched on mental health earlier on and welfare support. That's key across all our properties. So we have mental health and welfare teams in all our sites, and we have community facilitators within all our sites as well. So there's an activity programme that will go on whether you're within one of our halls or third parties, so it's that consistency in service, and that's really important to our students, that they still feel part of the King's community, and that's important.
How about you, Christian? What is kind of the growth strategy for CA?
Well, just, to keep growing big, really, as many beds as we can, through planning, get them developed, property manage them, asset manage them. CS is a promoter, so we, the more the better we take through. We want to enable, development, get product developed, occupied, and full. We're a hungry, outfit, but in my role, I'm just constrained by obviously these factors coming. And now it's the most difficult point, I think, since I've been in the sector for the last 13 years, when I first started off, the cap rates were, you know, they were coming in. They were stable or coming in. This is the first point at which they are moving out, and no one knows at which point they'll stop moving out. And if anyone thinks they do, they don't. So they don't know. So when we're trying to predict, or I'm trying to predict at a point in time now, what that development will be worth for the, you know, for the equity to swap out in 3 or 4 years' time, I don't really know, and it's hard to, you know, what do I put it at? So we want to grow, but right now I think our pipeline will be smaller this year than it was last year, because we've got all these different constraints and things to start. The viability is just not working. Land prices will not move very quickly. They don't move very quickly. They tend to move slower because people don't need to sell. In most cases, some cases they will. So we'll see the odd deal go through. So it is growth. We see there's a big demand in, you know, supply imbalance, so there will continue to be so. And we want to kind of produce product to fit that gap, but there's a lot of headwinds at the moment.
Yeah, and I think with that uncertainty, but then also the pressure that more student housing is needed, I think, you know, it's only going to create more and more tension for all of us in the room as well. What about Catskill?
We'll grab anything we can afford in existing locations.
You pick the rents up.
It's anything I can afford, I'm coveting.
Dynamic pricing.
Yeah, but no dynamic pricing. But we're looking at more office conversions. We've done 11 in the last 3 years. But sometimes, I was discussing this last week with Christian, you can get an office to convert and so honest you think, God, I wish I'd knocked the bloody thing down. It'd be cheaper. But we're doing that. We've bought a couple of assets, one from Unite recently, one from Nido, where they're grubby assets. They don't want them, but they'll pass them on to us little boys here, and we play around with them and make them nice. And I like those assets because they're generally 3 and 4 bed clusters. And that's not something you can actually make in the market, because you're going to make the sort of 7 to 8 bed clusters or studios, make more money on them. I don't like 7 or 8 bed clusters personally. It's hard to find a group of 8 mates and they all fall out by the time they've signed up and they don't want to live with each other. But 3s and 4s, there's hardly any about, because you can't do it. They are replicable in housing, but these aren't houses. These are small, tired, unloved halls. I like those things. And so that just, it makes
Someone's
our growth.
got to, yeah.
Someone's got to. It makes our growth. I can't say, well, I'm going to do 5,000 beds, I'm going to do 3,000 beds, unless we have some private equity in. We will probably get to our 2 years to get to our $250 million asset value size. We're just under 200 now. And it feels big, but actually when you look at it, it isn't. It's still a little minnow.
It's really interesting though, because when I was running the National Code, a lot of the HMOs that were super popular, that always went first with the 3 and the 4 beds. Always. You know, then your 6 and 7s would go, 6, 7s and 8s, and then but then there's also been a shift there, and it's really interesting that we don't build those types of size houses, actually.
All my office conversions are 3 students, the odd studio, I don't want to be lots of studios, 3 and 4 beds, and that kind of works. And you know there's hardly any in the marketplace, so we'll start dynamic pricing.
I think it's dynamic. Just put your rents. It's not dynamic.
If you just start higher, you will
We'll
start
just start higher.
Is there any questions before I go to my final question? I quite liked how it was we were in and out, so yeah, please, Lee. Behind you.
Hello. So question for you, Richard. So from a HMO and also larger scheme mix, which I think makes you unique on the panel, what have you learnt, and what advice? We've heard already from some of the earlier presentations around some of the squeezes on supply. A lot of people maybe coming out of the HMO market in certain cities. Is there any advice or insights that you could share, having walked it for 30, 40, 50 years?
Yeah, I mean, I've binned, sorry for using these awful words,
Yeah,
but
binned.
I've binned 60 houses in Liverpool. We did really well out of them, we made a lot of money on them, but really I just thought the area was not so good, and I thought there might be a squeeze on that. Yeah, no, we love Liverpool. You know Liverpool. We know.
How you doing, love? Yeah.
Yeah. And so we've moved, we're purely in PBSA in Liverpool, and we're expanding a lot more. And we only employ people called Kenny. Who knows? Good. So that, and there is a squeeze on HMOs. There's people coming out of the market. Article 4 is a problem. And HMO regs, every door needs to be a fire door, and they didn't have that before. So I mean, there are smaller operators are leaving the market, which means there's less. and there hasn't been as much PBSA development over the past 2 or 3 years, so that is the reason for rents to go up, isn't it? Scarcity.
Yeah, and I think getting into all of the issues around the fire, health and safety, the cladding issues that are going to happen over the next couple of years, that are happening at the moment, is a completely different. In fact, we could have another panel in itself on that. I know that there's another question.
Yeah, it goes back to the dynamic or tiered pricing. Christian, you mentioned you have a projection with where you think it should be going. If you're going into a mobilisation market where you haven't operated before, what dictates that level where you go, that feels about right, I should be at 30%, because we all know that every single market is different. Exeter is completely different to Sheffield. So what dictates your graph to say this feels about right if you've never been in that market?
Do you know what? I'm going to pass it to Matt in the audience here, who might have a better answer than me, because it's not my specialist topic. If you don't mind, Matt.
That's the mic.
It boils down to research, essentially, and experience. It's more art and less science, but there's definitely data that has to undersit it. So I'd say it's two data sets that we look for and try to build off of. One is, where do we want to sit in the market from a positioning standpoint, from the starting point of rent. We know generally where we want to be for our product type relative to the market, but you still have to suss out where that point in the market is. The other one is the lease-up curve. You have to understand that best you can, but you're probably going to be wrong. So I mean, you have to do all these things with the big slice of humble pie, because we know we'll be wrong in our first year, but you don't do it blindly and you don't just guess. We do it the best we can, but the second year will be much more sophisticated. So generally, we wouldn't expect to be able to dynamically price as much in the first year out the gate, but that may prove to be the case because we got it so wrong. So it might actually occur more, even though you didn't expect to do it as much in the first year. And in future years, you simply know what the market does. With the exception of, I think, as Maria said, that everything's changing year on year these last few years. So you usually see similar curves, but at totally different times of the year nowadays with changes happening. But you're right, it's very hard to do in the first year. You still have to do the best you can. It's what we think we're good at, but it is it's a blend of art and science for sure.
I think just to add to that, I think global agents, so most PBSA providers will obviously use their global agents or whatever. They often can provide a huge amount of data for most sort of like university cities, and again university relationships. So it's quite rare that a PBSA obviously would build a building and then sort of like a King's would say, oh, actually, because you've built that building, we'll build a campus. It's always the other way around. So the data sets are there. And the leasing curve often, well, international students particularly, will often come through agents. And I think if they can provide that and it matches like for the first sort of like Q1, Q2 data, you can kind of rely on it. And that's how we tend to do that in new markets.
I think particularly in the UK, there was much more developed, and we really do have that data. It's a lot richer, it's a lot deeper. You go into the likes of Italy at the moment, trying to get something, trying to understand where you would pitch yourself when it's a brand new market. It's so difficult. I think I was speaking with Jo Winchester, who used to work for CBRE, and she was saying, actually, valuation is so difficult in these new markets because you just do not know where the entry level is. So I think that's where more challenges across Europe would be.
Yeah, for sure.
Okay, I'm going to finish on a question. Like, we went and saw an amazing site today, with great amenity spaces, and we've had a conversation about you wanting to buy, what are they called again?
Shipping containers.
There we go, want to buy shipping containers and convert those, and like, where, some of these challenges we have, where's the innovation happening? Like, what do you see over the next couple of years? Well, we'll start with the shipping containers. What do you see there?
I've actually put them in for planning in a city you know and love, for a student hub and coffee house in shipping containers, and wow, they look fantastic. And it will get planning because it's a box park's just been approved there, and it does look great. And I've shown it to all people I know or walk with. I said, do you think these look cool? And they said yes.
Do you ask students though? Because
no, I don't
have the
ask
same
them.
thing with
no,
the call thing.
I asked them, I said, look, what would you perceive, would you go there for a coffee? What would you perceive about the product coming out of a shipping container? And they said, we perceive it to be really good. And that is interesting. And yes, I am looking at shipping containers, and I've sent you actually a PowerPoint this company gave me, and wow, and I will buy some, and I will plonk them in a field near you.
Okay.
And we will...
I live in Amsterdam, there's no
oh, right,
room,
no, they'll
so.
go and get them across. Pricing-wise, which probably you're looking at yield, and yes, you can make a shipping container fantastic, a 40-foot one, and would somebody live in it? Yes, they would. And it's not, this is not slum accommodation. They have better thermal insulation characteristics than HMOs. And I'm looking at a pricing level, which might interest some of you, about 35k to 40 a pop for a studio. So if I charged £100 a week for a studio next to a university campus, would I fill it? Yes, I would. And would it generate money? Yes, it would. And so, yeah, that is an affordable option. And I have had a conversation with a local authority and a university who said, yeah, do it.
Exciting.
We'll see anyway.
Love that. I also can't currently rent or buy a house in Amsterdam because it's a nightmare, so maybe I might come and test one for you.
I'll float it across.
Yeah, as long as it's not in Hull or anywhere.
Yeah, no,
okay. Yeah, any kind of things in terms of like innovation? And
Well, I think, having been in the sector now for a while, I don't think you can change the product anymore. There's no variation of the product. I think it's the innovation, I think, has to come from the digital experience, the experience in the building. How can you differentiate yourself, keep up with the latest crazes, the latest, what the students want? Because they know they're going to get a bedroom, they know they're going to get a bed, but what is cool? Why would I go to that building? What are you offering that is different? So I think it's just keeping up with the latest trends. You know, we have a selfie
room.
booth.
Put your hand up if you were in my selfie today on our tour. God, at least one of you must have been in it. Come on, there was about 50 of you there. So.
So I think you just have to have what is the latest thing that people want, because you're just trying to always differentiate yourself in the market niche that you're operating in. So what is it students about? Is it really high-spec amenity? Is it private dining? I don't think they get used that much. Do they use the carryout? What is it that they want? And just keep moving with the times in that respect, because the planning won't let you change the size of the bedrooms, you know, the size of the clusters, the size of the studios. That's all kind of dictated, so it has to be around the experience.
Okay, I think unless there's one more question, but, oh, there is, okay, yeah, Fab.
So my question was going back to the first affordability discussion that we had. You all have pressure to, provide affordable pricing. And some of it is also dictated by the councils. The other challenge of the cost of living crisis is energy costs, because of which there's a capex being incurred for sensors to capture data. Any thoughts on aligning students to meet those sustainability goals? Because most of the contracts are all inclusive. So you've got scenarios where students have opened the window but the heating system's on. You're still paying a heavy price, and then you can't do affordability because of the IRR pressure. So any thoughts on sort of gamifying this and aligning this with students so that they're on the same page and help you meet those sustainability goals, and you can in turn, from an affordability standpoint, give them experience points or credits into next year offer services around the property?
It's really difficult. We've sponsored the Green Room project, which it's quite a big study into the habits of students, trying to make them more sustainable. Most don't care, really, but it's a holistic thing. They understand more about it, but it's not just about heat loss and things. It's about using less of your shower and understanding that, etc. But there's some very clever retrofit technology. If you open your window, it turns the central heating down. There's plenty of retrofit devices which we're installing, and when you turn it up, it turns it down by 1 degree every hour, and nobody notices. We are doing that because other people are doing that, and that technology is already in travel lodges. And we're not the only people doing that. Yours will have that. You've got to make it sustainable.
Yeah, when I worked at Unipol, one of the big things that they were doing was actually incentivizing HMOs to use, if they use less, so it was an all-inclusive rent, if they went under, so it's also about the education, so actually giving them that information, this is how much you're using, this is when you're using it the most. Also at the same time, it's also, don't sit in your coat, it's also about, if you keep it on 18 degrees all the time, that's more sustainable than switching it, whacking it up to 30 degrees and then turning it off and opening all your windows. So also giving them that information, but then also incentivizing them that you can get money back. Like you haven't spent the threshold as well. I don't know if you guys, I'm assuming Greystar is also doing.
Yeah, I think it's a difficult one to incentivise students to do that, but we are looking at a generation of 18 to 25-year-olds now that all want to be winners, so competitions do help. But to your point, it is so hard. We are starting now a huge programme on the education piece, so it is very much like, well, how do you know if I've spent less? Like I'm in room 1 and he's in room 310, like how can you tell? So people are going to have to invest in that first, obviously, to make a difference in the long term. Yeah, it's an education piece. I'm sure everybody's going to run very different competitions and initiatives to get that off the ground. But I really think data is key. Like we need to start looking at what the students will and won't listen to, how they do and don't listen. So i.e. phoning them and asking them to turn their thermostats down is not going to work because they won't pick up. Like WhatsApping them, you might get a blue tick. Like it's how do you communicate with your students? How are you educating them? How are you portraying that message? How are you putting it across? And are they responsive? And if they're not, and you haven't listened to what will make them responsive, really that's on you not having the data. So it's letting them have the voice, I think.
I think Frank, actually, from the Social Hub, who is also our founder as well, said something about the iceberg experience. So, like, the more energy that you use, the more the iceberg melts and the polar bear dies or whatever, or sinks on the thing. And so it's like also kind of traumatizing as well. I think that we went through a hell of a lot, so thank you so much. Can I have a huge round of applause for my panelists? Thank you so much.